What up, 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 Crypto Warriors? It's Talking Crypto back at it again. Today is Tuesday, May 12th, 2020, the day after the historic halving, third halving of Bitcoin. Bitcoin will hit $1 million, says PayPal director. This is old. This isn't something that happened recently, but this was from back when I first got into the space, like 2017 or so. Let's get into it. It's going to be one of my longer videos because I have a lot of stuff to break down, baby. Here we go. Fed says it will begin buying corporate debt ETFs on Tuesday, which is today. Here it is. Again, everything will be linked in the description below so you could come and check it out yourselves. As always, DYOR, do your own research and do not take everything I say as some random dude on the internet speaking and sharing his own opinion as gospel. Do your own research. All right, the Federal Reserve said a facility designed to purchase eligible corporate debt from investors will launch on May 12th, bringing a key part of the U.S. Central Bank's emergency coronavirus lending program online following weeks of anticipation. People were waiting for this with bated breath. Oh my God, I couldn't wait. You know who's this helping? Who's this going to help? This is going to help, excuse me, this is going to help, obviously, toxic, dying companies because they're buying the ETF with a bunch of companies in it that are dying. They're not helping you or I in the sense of printing more currency to give us more checks to quote-unquote stimulate the economy so that this way we could spend. They're just buying up bad assets to keep the stock market afloat. It was first announced in March and has played an important role in keeping financial markets relatively calm since then. So because they were anticipating this happening, we saw that the stock market or stonks market didn't tank the way it should have. Like it did, you know, had that 30% drop back in mid-March. And then we're seeing a constant rise over the following weeks since then, because they know that Big Daddy government, or in this case, Big Daddy Federal Reserve, will come and save the day and help us out no matter what it is. And scroll down some more, and guess who is managing the rollout of this ETF funding or corporate debt funding, right? The Reserve Bank also posted on its website, so again, you could go check it out. The Federal Reserve, right? Just Google the website. But posted on the website the investment management agreement with BlackRock, the asset management giant. It's retained to administer the program. So that's a lot. That's like nepotism. That's like when, you know, you have the founder of a corporation or whatever, and he just slides his family in to run the business, so to speak. So, you know, it's just more of the same. They are having their friends and families look out or manage this supposed bailout. And guess who they're going to help? They're going to help their friends and families. So who is BlackRock? Right, BlackRock, and this is straight from Wikipedia, straight from Google, just quick Google search, just to give you a background on who they are. BlackRock Inc. is an American global investment management corporation based in New York City, founded in 1988, initially as a risk management and fixed income institutional asset manager. BlackRock is the world's largest asset manager with $7.4 trillion in assets under management as of the end of Q4 2019. That's a lot of T's, people. That is a lot of trillions. 7.4 trillion under management. And they're the ones that's going to manage this bailout for corporate, what is it called? Corporate debt ETFs. All right, so there you have it. Next, coming from Market Watch, Some traders bet the Fed will push interest rates negative next year. So remember, I've stated this in the past that the only way to go is down. Despite pushback from the Federal Reserve, some traders appear to be priced in expectations that policymakers will push rates below zero. So this is the futures market, and we have traders that are anticipating a push to negative interest rates. All right, until they credibly prove they won't go down that road, negative rates will continue to be a topic of discussion, said John Hell, interest rate strategist at BMO Capital Markets, in an interview. As soon as rate strategists, this is the part that's funny. As soon as rate strategists saw Fed funds suggest negative rates are conceivable next year, they said that's not going to happen. In a thin market, as soon as someone utters that phrase, you can almost be certain at least a handful of investors will quickly trade in the opposite direction, said Jim Vogel, an interest rate strategist at FHN Financial. So a lot of strategists or interest rate traders are anticipating us going in the negative, and they're pricing it in the futures market, in the way they manage their capital, in the way how they manage their funds and the funds of their clients. As much as the Fed will come out and say no, 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 always watch what they do, not what they say. Remember, a couple of weeks back, right after this whole thing dropped off a cliff, we saw the chairman, or the chairperson, because it's a woman, the chairperson of the Federal Deposit Insurance Company, the FDIC, come out and said, don't go to the bank and take all your money out. It's safest in the bank. Don't do it. Don't do it. When they start to say things like that is when you're supposed to do things like that. When they tell you not to do it is when you're supposed to do it. And we saw that again in the middle of March, or around that time, that a bank, I think it was a Bank of America branch in Manhattan, literally ran out of money because people were running to the bank and withdrawing, and they ran out of money. So that scared them, right? If the FDIC is quote unquote insurance, why are they worried? You know what I mean? So whatever. I won't go down that road. But next, we have St. Louis Feds bullard negative interest rates would be problematic in the U.S. So the St. Louis Fed is coming out, and again, this is, it ties to the other story there, where the St. Louis Fed is coming out and they're stating that yes, we will not go negative. And do I have anything highlighted? No, I didn't highlight anything in this one, but it's more of the same. They're coming out and they're saying that no, we won't go negative. I like this part, which he states that the U.S. operates differently than in Japan and Europe, arguing that implementation of negative rates stateside would be problematic. I think we can use other tools to handle the situation, Bullard said. So I guess that means by printing more currency and propping up the market is the other tool that he may be talking about. They've already used that. I mean, how much more are they going to print? Well, they did say it could go to infinity, so we will see. But when they're talking about negative rates and saying don't worry about it, you should worry about it. All right? And we even see that the president came out and stated that he wants negative rates. I mean, it will be beneficial to him, being a real estate mogul and all, to borrow money, to get paid through the negative interest rates, through the borrowing of money to prop up or put up more real estate and more buildings in the city of Manhattan or worldwide, to borrow more money. It'll be beneficial to him to have a negative interest rate because he'll be getting paid to borrow money. All right. And as savers, people that save money, we would be the ones be getting punished because we're trying to save, right? And a negative interest rate would be stealing money from us. So I don't know, man. We are living in some crazy ass times. All right, next, because Bitcoin halving happened yesterday, I just wanted to take a quick look, and this chart is from Needle in the Haze. Needle in the Haze, is someone here on Trading Views. I just Googled Bitcoin charts and I picked this one. You know, it was like one of the first ones to pop up. But here it is. This person, I don't know if it's a he or she, but this person have it lined up. I'm pointing to the screen as if you can see, but they have it the amount of gains that happened after each halving, and predicting for Bitcoin to go up to, let's just call it, let's round down and say $175,000 per Bitcoin after this halving happens. So there you have it. It's just good to, you know, fantasize and kind of and see where the traders and people that are sophisticated in using charts and things of that nature are predicting Bitcoin to go. They're you know, on the low end, they're saying 50K, on the high end, 250K, and this is somewhere in between, right? So next, speaking of Bitcoin, and I stated this in a couple of videos ago, where Paul Tudor Jones, you know, he came out and, you know, stated that he's putting Bitcoin, he put his money where his mouth is, and investing in Bitcoin, not directly in the underlying asset, but in the futures market for Bitcoin. And here it is. I have it portioned out here, and here it is.
For a long time, you were a skeptic of Bitcoin and some cryptocurrencies, but you recently appear to have changed your mind about that. What happened?
Well, COVID happened, and the great monetary inflation happened, and that made me begin to think about how do you want to be positioned in your portfolio going forward. So that's really what tripped my interest in Bitcoin. And you have to realize, if you just think about, say, Bitcoin versus cash, right? Bitcoin, when I think of stores of value, I think of it.
So he's talking about structuring his portfolio. I should have stopped at 30 seconds. I just started watching it myself. He's talking about structuring his portfolio and having a little piece, exposing himself a little bit to Bitcoin, and that it could be a good thing going forward. All right, let's scroll up a little bit. Let's close this out. All right, so where do I have it? At 50, so let's start right here.
When it comes to trustworthiness, Bitcoin's 11 years old. There's very little trust in it. We're watching the birthing of the store of value, and whether that succeeds or not, only time will tell. What I do know is that every day that goes by and Bitcoin survives, the trust in it will go up. If you take cash, on the other hand, and you think about it from a purchasing power standpoint, if you own cash in the world today, you know your central bank has an avowed goal of depreciating its value 2% per year. So you have, in essence, a wasting asset in your hands. So
you hear that? A wasting asset in your hands. So you basically have to, you know, protect yourself, because we see that they're debasing the value of your currency by printing more and more and more of it.
Bitcoin, I think it's a great speculation. I've got something between 1 and I think just over 1% of my assets in Bitcoin. Maybe it's almost 2. That seems like the right number right now. It's not, for me, it's not the greatest, it's not the, you know, the great cure for all the monetary ills, et cetera. It's a great speculation. That's what I would say Bitcoin is.
Right. Paul.
So there you have it. He has about 2% of his assets and the assets that he has on the management into Bitcoin. And he's a guy that for what I've heard, from what I've heard, I should say, that actually put his money where his mouth is. He doesn't take, say, the assets he have on the management and using it as a gamble. He actually is using his own assets as well to basically put in this, you know, bet on Bitcoin. So he's using his own money and the people that trust him, their money as well. Let's go to This part starts about here, 225. 225.
I was going to ask at the same time.
I have assets in gold also. I think gold can go substantially higher. And yes, the digitization of the world clearly benefits Bitcoin. I mean, we wouldn't even be talking about Bitcoin if we weren't seeing first cousins like Venmo and a variety of other ways. My children don't even carry cash. They barely even know what cash is. So we're clearly digitizing the global economies. You've seen.
So here it is. He's talking about, first cousins like Venmo, things of that nature, where it's a peer-to-peer payment system. And guess what started the revolution of that peer-to-peer payment system? Bitcoin started it. In 2008, the white paper was released, and in 2009, on January 3rd, the Genesis block was mined. And the first transaction took place between Satoshi and Hal Finney. Well, then people started seeing, like, oh my gosh, like, we can actually send value over the internet. So they came out with Venmo. I didn't, me personally, I didn't hear about Venmo until maybe 2013-ish, right? And here it is. So I had to look it up. So, Venmo started in 2009. We already know about PayPal. And Zelle started in 2017. So my point is, Silicon Valley or all these other entities, they saw what Bitcoin could do, and they basically just jumped on a bandwagon. It was a threat to the system. It was a threat to the regular system of sending money via Western Union or MoneyGram, going to the bank and wiring money and transferring money that way, or just being peer-to-peer and transferring money that way. If you borrow money for someone, you go to them and pay them back and things of that nature, right? Well, these entities, they saw what Bitcoin was able to do, and they saw that it actually worked, and then they came out with their own system. So Venmo, which eventually got purchased by PayPal, and then Zelle. Zelle is basically a way to send money peer-to-peer via your bank accounts, without actually, having to know the person and things like that. All you have to do is just have them, with basically send money within the U.S. within any U.S. banking system. And I'm gonna give you a funny story. The other day was my son's 10th birthday, and my dad, wanted to send him a little, cash or whatever, send his grandson some cash. So he's like, yeah, because of this whole COVID lockdown thing, he's like, well, how am I get the money to you or whatever? So I'm like, all right, you have, I saw this is so funny. So I said to him, like, yo, hey, do you have Zelle? I'm like, do you use Zelle? He's like, no, what's that? Whatever. So then I was like, how about Cash App? You know about Cash App? And he's like, no, what's that? So then, I wasn't even going to try to mention Bitcoin because I tried to before, and it was like talking to the wall. I'm sorry, Dad, if you're listening to this, but but my point is, people of a different gender. He even asked me about Western Union. I was like, there's no Western Union like close by to me. You know what I mean, and or close by to my son's mother. My ex's. She doesn't even have like a Western Union that's close by to her, where they live. And so I'm like, there is no like Western Union. You know what I mean? Like, who uses that? So then he's like, all right, I'll just put the money in their account. I'm like, well, they bank with such and such bank. And he's like, oh, I don't have an account with them, but I could just go there and drop the money and just send me the account number. Well, he tried to do that, and because of this whole situation, the bank is closed. That he actually went to two banks and they were closed down. I was like, so I tried to explain to him, like, why don't you just download the app, for your bank on your phone and just use Zelle? And he's like, oh, it's too complicated. I can't. And he he's just totally resistant to it. So it's like this billionaire says, right? His kids don't even use cash anymore. I don't use cash. Everything is either through like Apple Pay or shit. My clients pay me in Bitcoin and via, like Zelle or Cash App or Apple Pay or something to that effect, right? There is no cash anymore in my world, so I try to make as much of my clients as a personal trainer use Bitcoin. Use Bitcoin or Litecoin is my other go-to, and that's what I try. Or I do something electronic. If I pay my barber, sometimes I pay him in Litecoin, or sometimes I just sell him the cash if that's what he prefers at the time. So the point being, yes, we are in a new paradigm of where we are stepping away from using cash, basically, and it'll be the older generations that hang on to wanting to use cash and write checks and things of that nature. And it's just funny, for me as somebody that's in the Bitcoin space, that uses Bitcoin, that invest in Bitcoin and use all sorts of other electronic payment systems, right? My dad is totally resistant to even mentioning the use of some form of electronic payment system. He would rather use a Western Union, which will charge him like a 10% fee to send money to his own grandson. Like this is the kind of resistance we are up against. Is people are just stuck in their old ways and will not try new things, although it may be beneficial to them and it is safe and it won't cost them anything. It literally will not cost him anything to download an app which is his own bank. He could download the app for his bank and then just use Zelle to Zelle his grandson the money, right? But he would rather use that cash and put it in a bank account and say, okay, well, now I know it's there. So this is the kind of resistance we are up against, people. So the fight continues, basically, and Bitcoin halved yesterday. The halving happened yesterday, and we will see over the next 6 to 18 months the not repercussions. I'm lost words here, but the results, the results of that halving happening, the halving that took place yesterday. What will happen within the next 6 to 18 months, and maybe then people will start to understand the use of Bitcoin as a form of payment, even if it's not Bitcoin. For crying out loud, if you still want to trust, the banks, then use something like Zelle, right? Use Venmo. You know what I mean? So that's my rant. That's my video for today. Thanks as always for watching. Smash up that like, hit that share button, hit that subscribe button, and let's have a discussion in the comment section below about the resistance of someone that's of an older generation. And not just, I shouldn't say that, because it isn't all people of an older generation that is resistant to it. It's just of an older mindset. It's the mindset, because I know, like I said, I have clients that pay me in Bitcoin and they're like my dad's age, so they get it. It's just the mindset. You know what I mean? It's just the mindset. And yeah, let's hit that like button, and again, share, and let's talk about it in the comment section below. As always, it's SgtCrypto, and I'm out. Peace.